Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Everyone checking in on the market. So SPY saw a bounce today and follow through, but obviously giving us a big upper wick, and we have to be cautious of bear flags at this point because the bounce did not get the follow through the bulls were looking for. So looking at it on the hourly time frame, we had clear lower highs and we were looking for a break of that pattern. So we started today with just another lower high from yesterday afternoon. We pulled back, formed a support level, and then broke resistance. But breaking that resistance did not see follow through, and we then consolidated for a bunch of hours after that. Let's see what extended hours did. Wow, I actually just pulled that up for the first time, respecting that trend line pretty significantly there. If I were to really draw it, it would be down here. It's a sloppy trend line, but you get the idea. We're watching for the bear flag here. And tomorrow, pretty much what I'm going to be watching is a break of 287.03 is a red flag for the bulls. After that, we're looking down at this low of 286.34 and then down to the low that we've seen on this pullback. So if we lose the hourly uptrend on any individual name and any individual market, then we're going to be looking at the odds of a daily bear flag increasing significantly. So that hourly uptrend is very important. As far as resistance goes, it's 288.86, and then we look up to 290.35. And again, the most important support level for me is 287.03 heading into tomorrow. IWM, even weaker bounce, daily oversold bounce trying to get going, but we look at it on the hourly time frame and it's just not convincing. It's a bear flag. We held support of 161.03. I mean, technically we broke it by 5 cents, but I'll call that a double bottom. If we break that level more convincingly, we're right back down to our lows of 160.55, and the bears are right back in control if that happens. Resistance is 161.72 and 162.74. Bears still have the upper hand, even though we got the bull break. Again, a lack of follow through, and we gave that move right back after it occurred. QQQ on the daily, also a potential bear flag. So we look at it on the hourly. Find our key levels. So the daily level or the hourly level that must hold is 178.93. If that breaks, we look to 178.17, and the bulls need to break resistance of 180.03 and 181.02. So some nice clear hourly levels to be watching as we head into tomorrow. And again, if you lose the hourly uptrend, the odds of a daily bear flag increase significantly. Bulls trying to hold the weekly middle Bollinger Band. Pretty much we know a lower high is going to form on the daily on this bounce. The question is it a very weak lower high that's going to lead to continuation down, or can the bulls fight through this and get back to the low 180s to give us some space to work with for an attempted daily higher low that will likely attempt to form next week? XLF, trading sideways the last 3 days, and that's why the tech sector is running this market. We've seen a lot of weakness in the tech sector, and then the bounce in the tech sector that are pretty much driving SPY. And XLF is just trading sideways. When we break this 4-day range more convincingly, either break down below 27.88 or break out above the 28.30s, that will be impactful on the S&P 500. But as long as we stay within this range, that's still just giving the keys to the tech sector to let it do its thing and run the market while we stay in this contained range. VIC, big upper wick of profit taking third day in a row as bulls do continue to buy this dip, but the bulls are looking for a higher low on VIX, and anything above 1134, or actually let's use 1172, anything above that level is a higher low. Currently 1527 is support, so let's look at some inverse action here and what VIX looks like on the hourly. Bulls want to break the lower high pattern, and this is healthy consolidation. This is a potential bull flag at this point where we would draw our downtrend support line and our downtrend resistance line. So we're watching, the bulls want to see a break of 1659, and then we're looking up at 1749. And if we get a bear break of 1527, that likely means that SPY has broken its high to continuation. Again, it's not a direct inverse relationship, but certainly a loosely based inverse relationship that we're going to keep an eye on. So that's where we stand heading into tomorrow. The hourly time frame has been a great guide for the last 4 days. It's really helped me as a trader personally from day to day, just one day at a time. That hourly setup pre-market tells me which direction I want to be looking. So we'll see you tomorrow.